Hi, and welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features my conversation with Randy Kern, the Chief Technology Officer at Marqeta. It's a really interesting conversation because Marqeta has really built automation API rails on top of current payment and credit card rails. And they're really enabling new kinds of capabilities like just-in-time decisioning, buy now, pay later, all built on the existing payment networks, which I think is a really interesting way to layer innovation on top of existing foundation of technology. We really dive into the new kinds of experiences that are being built on top of those technologies. The increasing focus on more risk products and risk capabilities. How do we look at risk? And I thought the really interesting thing Randy said was really shifting from account-based decisioning and monitoring to transaction-based, where you're really moving your unit of account, if you will, from an account that you have with a customer to the transaction that's happening, which is a really interesting paradigm shift and a different way to think about credit lending, especially in the transaction space. So I think it's a really interesting conversation for anybody looking at the future of payments, credit, and commerce. It's really interesting, and I think you can learn a lot from this. So please enjoy this conversation with Randy Kern. Randy, welcome to the podcast, and thanks for joining me today.
Jeff, thanks for having me. It's great to be here.
Yeah, I was looking through my records, and I first talked to Marqeta, I think 2016, before you even joined. So, I got a lot of history with the company, but I think of you guys as sitting at kind of the forefront of the modern card issuing experience and kind of building on top of the card network, interesting rails and experiences and capabilities. So tell me a little bit about how you think about what it was you were trying to build in the card issuing space, what the problem was or the opportunities that you guys see in that area.
Yeah, Jeff, that's a great question. And I have to say, I haven't even hit my 1 year anniversary with Marqeta yet, although it's coming up soon in June. So I feel like I should be asking you the questions, frankly, if you've been around us since 2016. I'll give you my view on modern card issuing, though, and frankly, what excites me so much about Marqeta and working with our customers and their customers on a daily basis. The basic idea here is to bring modern technology components, things like open APIs and webhooks and all the sort of current generation technology approach to this space of card transactions and card payments. And allowing disruptors and innovators in the space to think up new and fascinating ways to allow consumers and commercial entities to use cards in their daily business or their daily lives in ways that they simply couldn't before. So much of the technology history in this space is fairly monolithic and certainly not very easily composable and very hard to change. And so the idea with modern card issuing and processing is to produce that kind of composable, modular world where you could bring your special idea, your disruptive bit to that overall network, that overall ecosystem, leverage the payment rails, and you bring a really disruptive, really new experience to your customers.
Can I ask, what are some of the interesting disruptive experiences, disruptive bits that you see your customers bringing? Because some of us, I think, can have this natural inclination that cards are like cards. And I'm always fascinated by some of the new payment tech because I feel like cards have worked pretty well. Like I take my card, it swipes everywhere, it works. But you guys are really leveraging this, or your customers, I'll say, are leveraging this for different types of experiences. Maybe dive into some examples of what that can look like, or where that innovation and disruption kind of experiences happen to make that a little bit more real for the audience.
Yeah, I think there's a big range there. And it's amazing sometimes how even fairly simple innovation feels very different as a consumer. The fact that I can see Cash App transactions on my cell phone, basically in real time, it doesn't revolutionize the industry. It didn't take a massive amount of engineering. It's a relatively straightforward integration with the Marqeta platform, but it's a really different consumer experience. Rather than waiting for your statement to show up and kind of looking back and going, oh yeah, what was that? It just allows you as a consumer to feel much, much, much more connected to what's kind of going on with your card and going on with your finances. And I would argue that that's a relatively simple, at least from a technology standpoint. There's complexity and scale and compliance and everything else to do a program at that kind of scale and reach. But even with that sort of simple integration, technically simple integration, produces a markedly different experience for the cardholder. We have other customers kind of at the other end of the
Mm,
spectrum, right? They're thinking about how do you bind the sort of credit determination into the transaction flow. This is leading to buy now, pay later, and a bunch of folks in this space. Klarna, Afterpay, Affirm as examples of our customers, who really provide a very, very different experience for the consumer at the point of sale. No longer do you have to have this sort of big, arduous credit line process that's now detached from actually making a purchase or kind of using your line of
mhm.
credit day to day. Now these are kind of connected in ways through that dynamic environment, through the kind of real time nature of modern card issuing and processing in ways they never could be before. And the last thing I'll highlight is that there's really interesting ways to do very real time and very dynamic either funding sources, looking at crypto as a source of funding, or crypto as a kind of indicator of credit worthiness or kind of funds to cover. And I want to point out
Mhm.
rewards as well. The fact that there's a real-time API and a real-time interaction with the card network, the point of sale, Marqeta is the issuer and processor, and our direct customer, it just allows so much more innovation in terms of how you want to track and reward and manage this entire experience.
Yeah, it's really interesting. You talked about some of those innovations are really consumer benefit, right? Like the seeing transactions in real time or being able to get the credit product at the time of sale detached from maybe a prior credit decision. And some of those are really lender oriented, right? Real time credit decisioning at a transaction basis. Do you see any interesting split between the kind of innovations that are more trying to improve the consumer experience and those that are a little bit more like optimizing the lender side economics or risk management or anything else? It feels like two different kind of different utilizations of the tech of the same kind of technology, but for very different purposes.
It's a great point, Jeff. I kind of have a basic philosophy that if you can find an optimization, if you can find an improvement in one part of your sort of product ecosystem or business ecosystem, you can generally find ways to bring those benefits and improvements to the other stakeholders, the other constituents as well. So yes, I think fundamentally
Mm-hmm.
there's sort of a core avenue of innovation, a core set of disruptive technology here that unlocks a lot of value and a lot of creativity, some of which is going to be more focused on the lender side, on the business side, some is going to be more focused on the consumer side. But I think at the end of the day, the more you can improve the consumer experience, the more you can improve the business experience, it sort of gives you the freedom to do more and more on both sides. The better your consumer experience, the more uh, folks are going to come along on that journey with you, the more excited they are about the product, the more scale and kind of success you'll have in the business. Conversely, of course, the more efficient and economically viable you make the business, the more
Mm-hmm.
interesting things you can do for consumers. And so I think there's a really nice virtuous cycle here in the entire ecosystem that allows us to kind of progress the underlying technology, bring this kind of innovation to market, and frankly, I think it helps every constituent over time.
Yeah, that's a good point. It's easy to kind of think of those two things as being in opposition, but really, when you can make the product better for a lender, you can generally better serve consumers, and vice versa. So that's a really good point. I'm curious. You guys are. It's interesting the place that you sit and the approach you took, because I know some payments companies, and I'm not. I'm more in the lending side of the world than in the payment side, but have really focused on kind of going around the card rails and kind of trying to build a new network, or at least kind of subvert the cost of using the credit card rails. And you guys really built, I think, or enabled to be built lots of innovations on top of the rails. Do you think that there's a reason, or do you think people are mistaken in the sense that the rails are part of the problem? Because they feel like a pretty robust thing, but I'm kind of curious your take on that, because there is this different set of companies that feel like their goal is to kind of build a payment experience that's maybe not enabled by the current rails, and it feels like you guys are layering on top with new capabilities.
I think it's amazing what you can do with the existing payment rails, and they've taken a long, long, long period of investment, of hardening.
Mm,
It's a complex space, and frankly, they work very, very, very well. Our origin Our founder, Jason Gardner, started the company about 12 years ago. And the idea
Hmm.
was putting sort of consumer Groupon coupons onto a card. And that's about as far afield of a normal sort of credit card or debit card payment scenario as you can imagine. And
Hmm.
yet, by bringing the kind of concepts of modern card issuing and processing, such that we're able to have this sort of much more modular, much more extensible, much more disruptive sort of brain, if you will, leveraging the existing payment network and all the reach and all the scale and all the kind of security that brings, you kind of get the best of both worlds.
Yeah, yeah. Well, I think of the same thing when you think about your examples of buy now, pay later companies or crypto companies, both of which are often seen as challenges to the credit cards or the existing payment rails infrastructure, and yet you have customers leveraging, the current payment rails and your technology stack to enable crypto rewards, real time fiat conversions, buy now, pay later type products at the point of sale without subverting the rails, which is really interesting because some people view those as challengers to the current payments infrastructure and card networks, and in some ways they can just be built on top of them instead.
Yeah, and that layered approach really allows you to sort of bootstrap innovation and disruption in the space without doing
Mhm.
such a massive lift as to kind of go out and rebuild the whole network. I really like that ability to bring innovation to a market, to bring innovation to an ecosystem. you know it, Ecosystems are powerful because they sort of let you,
Yeah.
as an innovator, as a disruptor, as a founder, they really let you kind of think about, here's the special thing I want to do, but get the leverage of everyone else in that ecosystem. And if your remit or your gambit is to sort of say, nope, we're going to start from ground zero and build the entire thing, there's a lot of heavy lifting in there that really isn't differentiated, at least early in that business. Maybe far down the road it might be, but early on, the ability to leverage that whole network, all of the merchants, all of the network globally, everything that those payment rails bring you, and yet still give you huge freedom in how you innovate and in how you produce very different experiences, whether it's for the lender, whether it's for the consumer, and how you or the business kind of maybe in the middle even, how you stitch all this together. You can do that leveraging the rest of that ecosystem, and get a really iterate much more quickly, get a sense of product market fit, and frankly grow a really compelling business very quickly. We Marqeta, we did a user study late last year. We
Hmm.
interviewed 3,500 adults in the US, the UK, and Australia. And I think even at that point, over 50%, I think it was about 51% of adults had used buy now, pay later at least once in the previous year. I
Hmm.
don't think you could have created that level of reach if you started out building the entire stack from scratch.
Yeah, yeah. Yeah, it may be one of those. We were joking before we started recording that we kind of both came from the technology industry. Maybe I've been in fintech long enough that I have to be called a fintech guy. But the entire history of the technology industry is really built on this kind of layered innovation, where very rarely do you see somebody break everything down. Google's like on occasion tried to go back to bare metal with some of their OSs, but even then, it's like really built on years of foundational capabilities that you don't rethink because you want to focus on the thing that you can do new, and the kind of almost the less far down the stack you have to start, the more quickly you can innovate, which is a very different approach. I think that many industries would understand how much of that innovation is really layered on top of historical technology, and just really robust layers of historical build that's there as your foundation, and makes it much easier to start moving on the stuff that's new and different.
It's a really good point, Jeff. Yeah, the technology industry, we really like to take advantage of what's come before, and those areas are innovated and iterated and changed as well. But the great thing about our industry and kind of the basic approach in tech is, as much as possible, we loosely couple those things. So
Yeah.
those pace, the sort of rate of change and innovation, the overall system can change at a very quick pace, even if each individual piece is sort of working at its more appropriate cadence. It's
Yeah.
harder to do if you're building a car.
It is harder to do if you're building a car. It's one of the beauties of pure software, that you can really have those interfaces and innovate dynamically in the different layers. I want to jump and talk a little bit about risk. I mean, my understanding is you guys are starting to look at kind of analysis of risk in new ways and how you can get smarter. This is, of course, near and dear to our heart at Upstart, the belief that, most risk decisions are under optimized, maybe is a super techie way of saying it, but that there's a lot of room for improvement and understanding of risk. And therefore, both, as we kind of said earlier, benefits to the lender, in terms of economics and returns, and also benefits to the consumers in terms of, hey, if lots of people are more credit worthy than I thought, I can lower rates, I can expand limits, I can approve people who aren't there. What are you seeing that are interesting innovations, or where are your customers leading you in terms of things that they're interested in improving from a risk analysis point of view?
It's a great point, Jeff. And I think this is another example where, by making half of the business more efficient, in this case, more focused on the lenders, on managing risk, on their exposure, you actually make a better consumer experience too, right? It enables something that otherwise wouldn't be possible. And personally, I love those sort of closed loop or full system improvements. They're just super rewarding. So at Marqeta, we recently launched a suite of products actually we call Risk Control. And it's built up of 4 separate products, all designed to help our customers kind of improve their fraud management and really manage their risk end to end. So the kind of core central piece of this is around real-time decisioning. So this is a tool that allows our customers to do very fine-grained, very fine-tuned choices and kind of set up their rules and plan for how they're going to manage risk for any given transaction. Then behind that are great tools around Know Your Customer, KYC, to enable lenders to kind of build and automate and improve their experience of how quickly and efficiently and effectively and correctly they can choose to make credit determinations. Once again, back in the kind of transaction flow, 3D Secure, very important tool. So that's a suite used by a bunch of our customers, and the user experience of that. When it first came out, I remember as a customer going, "What is this? This is all kind of rough and janky, and it's really annoying whenever
Mm-hmm.
3D Secure pops up." The experience today is fundamentally different, and as a consumer, it's much, much, much smoother. And every time I come across that, every time that experience pops up, I'm actually very happy because it makes me feel much safer, kind of using my card out in the world and on the internet today. And then the fourth piece of the risk control suite is really around disputes and chargebacks. And so this is the data and the tool and everything such that a lender can have a very efficient and effective and compliant organization in place to manage that entire part of the cardholder experience.
Well, let's dive into at least one or two of these. The real time decisioning is really fascinating to me because you're talking about, I think, to a traditional banker, a pretty dramatic shift in the way they think about managing risk. I mean, most credit card issuers, if you're not one of the 2 or 3 really big guys, think about issuing a line, and then maybe on a monthly or quarterly basis, you look at CLIs or CLDs, but you're really not underwriting at the transaction level. You're underwriting at the kind of line of credit personal level. And you're talking about really moving the credit decision to individual transaction level, which is I mean, it may be a small thing, but it's a total paradigm shift in how you think about risk management, and how you're approaching it. So talk to me a little bit about what you guys are enabling or what you're seeing happening there, because it's a really interesting shift to go to actually underwriting like individual transactions versus saying, hey, here's Jeff, we gave him 20,000 on the card or 5,000 on the card, and like now we hope that in a month we'll find out if we were right or wrong, and if we want to keep his loyalty by increasing it or limit our risk by decreasing. This is like, it's a very different approach in terms of what you're thinking about as the fundamental unit of underwriting.
I look at this evolution the same as modern card issuing and processing, right? It's the idea of shifting from the card and the credit line and the account and all these, relatively static things. We're kind of shifting the focus, shifting the determinations, shifting the logic, shifting the processing down to that transaction level.
Mm.
And so whether it's about creditworthiness, whether it's about merchant risk, kind of you name it, right? Being able to provide that kind of intelligence, that kind of computation, the sort of focus really at that exact individual transaction level, I think it's very, very powerful. And frankly, while we've seen a lot of disruption over the last several years from this, I think there's a lot more to come. So in the case of real-time decisioning, it's basically a tool that allows our customers and our partners to decide in advance what's important about a transaction, and for a particular cohort, what matters. How are you going to make that determination? You might have different rules for different kinds of merchants. You might have different rules for different geographies.
Mm.
The sort of tooling and capability, and then frankly all of the data behind the scenes to understand that, to build that, to kind of validate your opinion and beliefs and thoughts about how these things should work. It's a very, very powerful setup. And I think as you extend that even further into some of the Marqeta stack, and you think about what you can do with open APIs, what you can do with the webhooks that also make calls directly into our
Mhm.
customers, even in the transaction flow, something we call just-in-time funding. When you think about putting this entire kind of universe and platform and set of capabilities together, it really allows whatever entity is trying to create the right experience, much, much, much finer grained control, and the ability to really produce the right set of decisions, the right set of outcomes for much more fine grained sets of customers and consumers than they probably ever could before. And I really like how you talk about sort of bringing that credit decision to the transaction, right? And
Mm.
kind of the closer we bring these things together, whether it's buy now pay later is a great example, but also in terms of risk control and sort of just
Mhm.
how you make the focus less about the account, less about this sort of big grandiose static thing, and now it's real time. It's this specific person with this specific merchant making the specific transaction at a particular point in time. It's a very, very powerful place to go.
I'm curious if you think of this as being something that's, I mean, it's uniquely enabled in a certain way by technology because you just couldn't have done this sort of analysis and real time decision, prior to certain speeds of networks and capabilities of processing, et cetera. But I also wonder if there's a degree to which some of the, machine learning, AI, whatever you want to call it, but it was hard to make sense of that. Like I can imagine if you're in the old school of like, here's my 5-page rule book, it's very hard to figure out like what it should be with all these different merchant types. And so do you see this as kind of a moment that's not only new capabilities, but kind of new technology opening the door and unlocking things that just, it wasn't that we didn't think of them before, it's that they weren't technically really feasible to do, or at least to do with any kind of real uplift or optimization versus the old way. And this is kind of a moment, it feels like, where all of a sudden these things are possible and it turns out they're more valuable than maybe we appreciated.
I think it really does unlock a lot of capability. So real-time decisioning allows you to get much more fine-grained and kind of take that, 50-page rule book and codify that to something that can operate transaction by
Mhm.
transaction. But we're also working, of course, in AI and machine learning and kind of extending that way beyond that rule book to the point where the machine is kind of doing predictive analytics and making
Mhm.
suggestions back to the customer. So this is an area of research and development that we see very, very interesting
For
opportunities
sure.
in the industry at large. Even to abstract this even further, the reality is that this technology has made much more data available
Hmm.
to use for a particular decision, and a much more minute decision than we ever would have before. The amount of data and sort of papers I have to share for a new line of credit or a
Hmm.
mortgage or something, you know, it's a very complete picture, but it's an arduous process. It's an arduous process for the consumer, and it's an arduous process for the lender. The more we're able to use this from just sort of other digital data
Hmm.
that's out there in the world, and provide safe and secure ways to leverage this in sort of just-in-time decisions. I think it can unlock a lot of really advantageous consumer experiences, and it's also, to your point, great at kind of minimizing the overall risk for the lender as well. There was a Nielsen report not long ago that called out card fraud as a very, very large portion of just global fraud overall. And so I think the ability to bring these kind of micro decisions and
Hmm.
this sort of data lake or ocean of data, if you will, to the problem at hand unlocks a lot of capabilities. And frankly, is another scenario where it's better for the lender and it's also better for the consumer.
Yeah, I think one of the things I realized, I guess, as the old guy from fintech now here in this conversation, but is just the degree to which the ability to optimize these decisions and improve them really could unlock not only benefits to lenders but to consumers. And one of my co-founders, Paul, sometimes says like every dollar of interest a consumer pays above the basic cost of funds is done because of inefficiency in the system, right? Like if we had been smarter about making a decision and hadn't suffered losses, we could all be charging, we wouldn't be approving transactions that aren't going to be repaid or that are fraudulent, and everybody would be paying the federal funds rate on all their borrowing because there'd be no losses. And we're so far from that. And I think sometimes we lose the picture of how much the world can get better for consumers as well as lenders when we get better at making these determinations, because there's so much if you think of losses as the problem as being our loss is too high, then banks do a pretty good job managing to them often. But if you think of the problem as our approvals as high as they could be for the losses we're willing to suffer, well, then you get a very different picture of what the opportunity space is to do better decisioning, and make finer grained decisions that then unlock more of that approvability for credit for consumers.
Absolutely.
I did want to dive into your 3D secure, or I'm always curious. Like whenever I put my credit card online now, I'm a little nervous about my credit card going place. So, what is the nature of that technology that you said makes you feel more comfortable when you're doing stuff? I've got credit freezes on all my identities because I just figure like between everybody's been hacked between Target and the credit bureaus. Like my information's probably out there. What are you guys seeing in that space? Because I feel like fighting fraud and making consumers more comfortable transacting digitally is a really valuable thing, but also a pretty hard problem to solve given the changing nature of the threat environment from a fraud perpetrator point of view.
Yeah, it's one of these perennial areas where you've got good actors and bad actors, and each is up-leveling the game constantly, and so it's a continual area of innovation. And to your point, I really love the framing that it's not just about minimizing losses, but it's really about ensuring that we can put as much of the funds in the system towards good work as possible and towards approving as many good transactions as
Mm.
possibly can. I frankly, I wish more merchants and more card issuers would use 3D Secure more often. Because I know I as a card holder really sort of appreciate it when that pops up, and I know that it's the merchant I think it is, and it's my card, and I'm very intentionally using that transaction. At the end of the day, it's not up to the issuer. It's up to our customer to decide to make those determinations. And our
Yep.
actually one of the things you can use real-time decisioning for is to kind of cue that off or kick off that particular process. But for those who haven't experienced it, it started as this very clunky sign into 47 different websites experience, where if you did an online transaction with your card and there was some concern that it might have been fraudulent, you would basically have to go prove your identity and kind of go through this big,
Right. Yeah.
long, arduous process. Over the last many years has gotten much smoother, and with a
Hmm.
lot of card programs out there, it's something doable now from your cell phone. Right? It's a much smoother, much more less invasive process, yet still brings that high degree of certainty both to the merchant as well as the consumer that this is the transaction I really think it is and really intend it to be. So it's just an interesting way. If we go back to kind of open APIs, webhooks, kind of really how dynamic Marqeta is with our customers right in the transaction flow. With our capability of just-in-time funding, our customers get an opportunity to make an authorization decision when they want to, real time in that transaction. You can almost conceptually think of 3D Secure as an opportunity for the cardholder to be part of that transaction approval process as well.
Yeah, yeah. I think that's right. And it is interesting to think about how, if you can reduce the friction for something like that process, how does that enable you to maybe actually be more liberal in where you ask for that verification and reduce fraud? And it's kind of driven by, hey, if it's really hard to do, I'm not going to do it very often. I'm going to suffer some of those losses because I got to be pretty highly confident. But it's really interesting to think about how you can simplify that experience and go, oh, now we can do it more and actually reduce the levels of fraud, not just because we're smarter identifying it, but because we've reduced the burden involved to do a verification of a transaction. And therefore, it's not as penalizing to us or to the consumer to actually leverage that capability.
Absolutely. The more arduous something is, the more you have to
All
be
right,
really
Randy.
protecting against a significant downside.
Yeah, it's that kind of digital technology experience of like, hey, there's costs on both sides, right? And so you gotta weigh those, and the cost of friction is, I think, often underappreciated, at least in our space. That like it's very bad, and we actually found, interestingly, um, from a lending point of view, a little different than your car transaction, but that the best borrowers were not only rate sensitive, but they were friction sensitive. And so not only do we see drop offs when we introduce friction to the process in terms of conversions, which anybody could predict, but they're actually an adverse selection kind of drop off where the best borrowers are like, no, no, I'm not paying that price. I'm not doing that work. And so you actually saw not only decreases in the conversion funnel, but you can see deterioration in the overall quality of your borrower pool because the good borrowers are friction sensitive as well as rate sensitive, and they will walk away when your process is worse, not just when your rates are higher, which was a really interesting learning, but I think tells you a lot about the kinds of experiences we have to build in the future.
It's a really good point, Jeff. And the sort of selection bias there is
Right.
fascinating.
Yeah, they really are. They're an interesting space. Was there anything you were hoping we covered today that I didn't ask you before I fire my final three questions at you? I know we're running right at half an hour. Is there anything else you thought we ought to cover that I screwed up and didn't ask about?
No, Jeff, I thought this was a really great conversation. I enjoyed exploring these topics with you.
I'm liking asking this question if people have something because they always tell me I did a good job, and then I feel better about my prep work. So, thank you, Randy. Well, as I guess regular listeners know, I ask the same three questions to everybody to end the podcast. So I'll fire them at you now, and I'm curious to hear your answers. The first, what's the best piece of career advice you've ever gotten?
Oh, that's a great question, Jeff. I've been the lucky recipient of a lot of great advice, a lot of great mentoring, and I've worked with a lot of great leaders over the years. So I've picked up a lot. But I think if I had to pick one, it would be this realization that perception is reality. And this is especially acute, I think, working with your
Mm,
coworkers, your customers, your partners, kind of all the stakeholders in whatever environment or situation you're in. At the end of the day, no one has perfect data. You try to share and be transparent and open, but at the end of the day, yeah, everyone is going to have their own view of this and kind of getting to the point of realization. And this was a hard lesson for me to learn. It took hearing this advice many, many, many times, but eventually I kind of set up a little experiment and proved to myself that this advice was true. That the way a person perceives something, that's a fact. That's reality. You have to work with that just as much as 1 + 1 = 2.
that is great advice. As I showed that, that's what my kids took away when I showed them the movie Sneakers. I'm sure you know the movie Sneakers, but there's that line where it says, "The world operates not on reality, but on the perception of reality." It is a fundamental realization. It's a great piece of advice. All right, question two. You're kind of newer into the lending consumer banking space, so maybe you don't have an answer here. But was there any advice as you were coming into this space that you were given, or perspectives that were shared with you that you thought were particularly insightful, or are you still learning on the job?
I'm definitely learning. I've been in the tech industry for decades, but only started at Marqeta, and this is my first foray really into finance last June. So, well, I've gotten a lot of advice. I've learned a ton along the way. I'm still looking forward to what the kind of capstone on that's going to be.
All right. Well, welcome to the space. It's a fun transition as someone who came from the enterprise cloud technology space into fintech. It's been I don't know. I always enjoy being not just at the fundamental building of tech, but at the intersection of tech doing something and changing the capabilities of a different industry, which is what I think is happening in fintech right now, where those modern technical capabilities are really opening up new possibilities for finance. And that's always, to me, in some ways, more exciting than the building of those building blocks that enable it, because it's where the rubber meets the road for real world applications.
Tech is sort of intellectually interesting in its own right, but what really gets me going is why we do it. The impact it has on our communities, on our partners, on our colleagues, on our customers. There has to be a reason, at least for me personally, there has to be a reason to build what we do, to experiment, to innovate. And it's all about the impact it can have on real people and the folks around us.
Yeah, I agree. That's the thing that makes it exciting for me is to see those real world applications. So my last question for you, what's one bold prediction for the future? You can take this any way you like, any direction you choose, but one
Well,
bold prediction for the future.
I really see that this shift to more dynamic, more sort of modern kind of transaction level experiences continuing and frankly taking us in places that we
Mm.
can't even envision yet. You and I talked about a bunch of them in this last half hour, but as I think about people using their phones, as I think about people using their watches, as I think about payments as part of everyday life, it's not the card, it's not the credit line, it's the specific transaction and kind of everything around that. How do you think about rewards for
Mm.
it? How do you think about record keeping? Just everything that you might want, kind of shifting that focus from the account and shifting it down to the transaction and everything that enables. I think we're still, frankly, in the very, very early chapters of what that really means to a cardholder, to someone out there either conducting business or living their life.
Yeah, I think it's really interesting, and I think it ties to this concept of the embedding of finance more deeply of the lending experience. I'll say into the transaction itself. You see, kind of BNPL was not just a different product; it was really embedding the lending decision in the purchase experience, which is kind of a new concept, but is it's not just the real time nature or the transaction specific nature, but I think it is the part of that future is the embedding of that experience into the actual consuming, shopping, buying experience, which is, I think you're right. We're at the very early days of knowing what that really means, but it'll be interesting to watch it develop over the next handful of years. And I think we got a pretty good perch to do it from.
Thanks so much, Jeff.
Well, thanks for coming, Randy. I appreciate it and sharing your thoughts. This was an enjoyable conversation. I'm sure the audience will greatly appreciate it.
I had fun. Thank you very much. Appreciate you having us on.